Good morning, everyone. Good morning, ladies and gentlemen. How are you guys doing today? The current time, it's 9:28 in the morning. Usually I start this webinar exactly at 9:30. Today I just started a couple of minutes earlier. Hopefully there are people around, and I hope you guys, you don't just wait for exactly 9:30 to press the join button. Hello, Cookie. So let's wait for a few more minutes until everyone will join us. So for those who are here, how is trading going? I'm wondering, where are you based, country? Right now, I'm in Cyprus. If you know where is Cyprus, it's in Europe. It's an island, actually. And yeah. All right, I think it's time to get started. So guys, for those who don't know me, my name is Theo. I work at Admirals exclusively as an analyst and educator. So I'm hosting these webinars on a daily basis for you to be up to date with market analysis, with some possible opportunities. If they arise the time we do the live, then we can also open some trades. However, just to make sure all of you, first and foremost, you have the Admirals mobile application. You can download from the App Store, from the Google Play. You can place your trades here from now on. You can monitor your account. And of course, the risk warning with the disclaimer as well. All trades I open right on the live. If I open trades, it's just solely based on the way I see the market, also based on my risk appetite. And I have a lot of experience as a trader in the market. So it's not a recommendation for someone to open the same trades. It's just for market analysis mainly. All right, so let's I see there are more people coming on board, so let's wait one more minute. If you ask me about my trades, I say my cable short is doing fine. That's awesome. Cooking, that's a good trade. I think I opened a trade on the cable as well. Cable, for those who don't know, it's the sterling, the JBP against the US dollar. So for those who just joined now, guys, I would like to welcome you to this morning briefing webinar. We started with our risk warning and the disclaimer. Now we are on the Admirals Instagram page. If you haven't followed us on the Instagram page, please make sure. I will share the link on the chat below. And it's really important, in my opinion, because here we put on a daily basis stories, we create reels as well. So you can, in an, let's say, entertaining way, you can get informed about all the market major news events, especially with the reels I do on a weekly basis. For example, now we have the non-farm payrolls ahead. What does the non-farm payroll mean for the US dollar? And in about 30 seconds, I just explain all the possibilities for here. Okay, and there are so many more things to get educated from this channel. Here is the link. I'm sharing to both channels. Then we have the Telegram page. You see here, we go live in 10 minutes. Tune in. Yesterday, we posted about the curtain channel indicator, one of my favorite indicators, by the way. I didn't post it, but I like when they post it. Okay. Also, the purchase manufacturer index for the US dollar, some analysis here. So really, it's very good, very good way to learn as well and to get informed. I'm sending you also morning, Rumen. Have a nice day. Rumen, I think you asked the question yesterday, and it was right the time I was turning off the live. So, and you didn't left a comment on the YouTube, so I didn't have the chance to answer. If it's a relevant question, you can ask me today, mate. And the last one, the YouTube channel. It's one of the, definitely it's the most important channel to make sure you subscribe to the YouTube channel. And also, please, guys, give us likes on the videos we do if you find them good enough for yourself, with a lot of value. I would really appreciate it. As I always said, we put too much effort to make this video, so definitely I will appreciate that. If you scroll down on the trading spotlight, you will see all the webinars about the webinars we do for exclusively education purposes, myself, Pauls, and Jens, and there is a lot of content here. There is a webinar I've done about trend trading, and it's one from the feedback I received, it's one of the best webinars people they watch so far. So please make sure go and understand how I explain the way to read the trend, so it makes sense for your trading, and it's going to help you a lot in your trading improvement. So let's go to the calendar and see the major news events for today. This one here is the upcoming event for the day, and it's from the Canada is coming. It's Purchase Manufacturer Index. Previously, it was 60.9. We don't have a forecast here, and we're going to expect the actual later around the New York Open to see what the number is going to be and how the Canadian dollar will react. We are holding some positions against the Canadian dollar, so we will see how the market is going to digest this information. Earlier, sorry, on the favor of Canadian dollar. Now got confused about the Australian dollar position. So we had the trade balance. The number came way lower than the forecast and also way lower than the previous. So for traders, it shows some kind of weakness in the Australian dollar, but doesn't necessarily mean that this weakness is going to reflect 100% in the market, because if the Australian dollar is getting weak, but there is, let's say, the euro, I just take a random currency and I just say the euro, it could be pound, it could be Swiss, whatever. If also the euro fundamentally is weak, then if we see this currency pair in one direction, let's say we see it in an uptrend, it means that one of these two currencies are stronger comparing to the other currency, not necessarily comparing in general with the rest of the currencies. Okay, that's very important. And premium analytics, today's top headlines, Fed wants to pause after December rate hike. Top European Union official backs call for gas price gap. Fed daily says more rate hikes needed, dismissing pivot talk. US believes Ukraine was behind the assassination of Putin's allied daughter. Elon Musk and Twitter are at odds over terms of agreement to close deal. Former Uber security chief found guilty of obstructing FTC probe. Okay. So let's go to the charts. Let's open the MT5 platform and let's start. Today, I would really like to start from the indices because, as I said yesterday, they are performing better than the currencies. Okay, and in trading, we must become flexible. And if we see that a specific type of market, it's giving us some clear trends, then it's better to stick with that and not be just and accept to change and see other markets as well. Okay. Darshan, morning, you look so different without your glasses. Thank you, mate. I okay. Can you explain the contract size difference? That's from David. Yes. I'm using Rumen. I'm using Ketlen for 1, 2, and 3 ATRs. Okay, that's great. What's your setup? When I use the Ketler bonds, I just leave the default. I don't really touch them. I just leave the defaults. And when I use them, I use them on the oh my God, I use them mostly on the what's the name, on the stocks and not on the currencies, because the volatility in the currencies, it's so much different. And sometimes the Bollinger Bands gives better signals on the currencies, so I prefer to use that one. Can you please explain the contract size difference between indices and FX? Yes, definitely, David. We'll go through. So let's start with the US dollar index today. After this impulse move to the upside, the market, it's just pulled back. Yesterday, the buyers, they stepped in around this area of support. We were expecting them to come and touch the trend line. They didn't. But anyhow, you understand the point. When we see around our support some reversal candle, it means that buyers, they stepped in, and especially if this reversal candle, it's aligning with the predominant trend. So we can see some more weakness in the US dollar, let's say for at least for today, for intraday trading. So when we flip to the currencies, we can see that the pound, it's had a reversal price action yesterday against the US dollar, the euro, the Aussie, the Kiwi, and then USD against CAD and USD against yen, USD against Swiss to the upside, because the US dollar on this is at it's the base currency, and for this is the quote currency. So the base currency, it's the currency, the first one in the row, and the quote, it's the second one in the row. Let's move on. So we expect to see some strength in the US dollar. Let's have a look at the DAX. Yesterday, the DAX didn't move much to create a new higher high. And if I zoom in here, we can see that this candle here, I always say that this, when we find it, that's a hanging man. That's how they call it in Nielsen's candlestick book. It's a brilliant book for those who want to get into more in the candlestick patterns. And when we see impulse, green impulse candle, and then we see a bearish reversal candle like this one here, without making a higher high, as you can see, this candle, yesterday candles didn't create a new high. It means it shows weakness in the market, and most likely we can see some bearish bearish move. The FTSE, we usually don't analyze it, but really this one here, it retests the strong support. So maybe we can see some push to the upside. Anyhow, be mindful around this area here. We have, it's the last swing in the market. So maybe the selling activity will resume here. If not, then we break above. Then we can look at the higher targets, because this is the resistance here for this move, if it's going to push to the upside. Dow Jones 30. We had a break on the high here. However, remember, we said we are in a downtrend. We don't know if this push to the upside is a create of a new trend in the market, but in terms of big picture, we are in a downtrend. On the 4-hour chart, we had yesterday this bullish engulfing candle. And remember, we discussed about the indices that when we had the live trading, we are on this candle here. And we had these two inside candles, and we said that if the price, it's not going to close below to destroy, let's say, the strength of this inside pattern, then we can just buy on the breakout and we can target the upper channel line. But here we had a clear close, so that wasn't a case. Then a bullish engulfing, it was a good signal. I didn't take it because I wasn't around. I think that was at late night. Yeah, it started at 8 o'clock, and at that time I don't usually look at the charts. Then same happened with the Nasdaq, and the same happened with the S&P. So they gave some good opportunities, the Nasdaq and the S&P yesterday. This bullish pin bar, also bullish engulfing, rejection here around this level. It was a good trade. Now we have a new high, so maybe we can see some bullishness still in the market for both. So we can keep an eye on that. What's the name of the author of the candlestick book? It's Steve Nielsen. Steve Nielsen. I will just put it here on the chat. You are welcome. Dow Jones is making divergence with RSI 1 hour and 4 hour. Let's put the RSI on the Dow Jones. RSI. Let's check the 1 hour. Yeah, definitely. On the RSI, we can see the price is making lower highs, and we have equal or higher highs on the price. So this is a divergence, reversal divergence. And as we said, that reversal divergence, it's not that clear. Yeah, it's also on the 4-hour charts. Yeah, definitely spot on. Florin, well done. But doesn't necessarily mean that the divergence, they're gonna change the direction, the trend in the market. They can temporarily put the market in a retracement, but doesn't necessarily mean they can put the market in a trend reversal. Okay, so when you are trading divergence, just understand what do they mean before you apply them in your trading. Okay, so let's keep our channel here with the pound. We broke below. Now I turn it to the currencies. As you can see, yesterday from this level that we marked here, we had the bearish engulfing here in the pound, so we can anticipate some weakness. For those who like to take the 50% of the bearish engulfing, we can measure it using the fib tool because it's easy. We have the 50% here, so an entry could be initiated here, your stop about here, and then target, it's quite far away. So for today, for intraday trading, we have this, if you watch the webinar, the webinar I've done with the trends, you can understand that now I flip it to the 15-minute chart. So we had this higher high. So this low here, it's the relevant low in the market because it creates this higher high from here to there. But unfortunately, many traders, they're gonna see this low here as a failure swing, let's say, or they can see this one here as the relative high. Then they say, the market, it make a new low here. But unfortunately, this lack of pay attention is what caused many traders problems. This point here create an impulse move to the upside, but didn't manage to make a move higher than this move here at this point. So this move here, it didn't exhaust, it didn't overwin this impulse move. So how can we take it as a valid swing? It didn't create something in the market comparing to the previous swing. Like this swing here, it create a new high comparing to this swing here. So we have a higher high, but right here, we don't have a higher high than this one. We have equal high. So this, it's not the most relevant swing. Okay, and most of the times, traders, they get caught right at this point. They see, this is a lower low. No, the lower point, it's this one here. And if we have a lower low, then and only then we look for retracements to enter short in the market. I hope, guys, you start slowly understand this. 50% retracement on this up direction. Yes, Florin, that's correct. Rob the Trader, what are your thoughts on US Tech 100? Do you mean the NASDAQ 100? If that's one, we say that today maybe we can experience some sort of reversals there, or look, because of the strength of the US dollar, I will say that maybe it's a little bit pushed to the upside left, but not that clear. That's what the market is. That's what can I read from the markets. Let's move on. Euro US dollar. We touched this channel. We had multiple rejections and creation of new trends in this channel. So the price came here with an inside candle. For candlestick traders, inside candles is better trader when with a stop, sell, stop orders, sell, stop, instead of limit orders to get into the retracement of this candle, because the inside candle shows indecision, it shows contraction on the lower time frames, and it's better to wait. If the sellers, they're going to come in and take the low here, then we can start selling and target this lower point here. But for intraday trading, if I see indecision candles like the inside candles on the daily chart, I prefer to find another daily currency pair which shows a clear direction, and that was the pound in this case. USD CHF, really is mixed. We expect the US dollar to get strong, stronger. Now we are at this resistance, so really that's not a clear currency pair to bet on that. Aussie is drifting sideways, although some rejections at the bottom here. It's really not a clear currency pair, neither for daily trading or for intraday trading. The Kiwi, gradually higher highs for the retracement. A dodgy outside candle here. Fully decision. 2 days ago, again, fully decision. So not clear to do something with that. Excuse me, guys. USD against the Canadian dollar. We had this move as a retracement to the downside. Now the buyers stepped in. If you remember, the US dollar can get strengthened today. So on the intraday, from the daily perspective, it's not much to do with this one. We have higher prices now, so we can move our resistance here. There is no much room to do to trade it for on the daily chart. But if we go down to the 1 hour chart, we have this higher high. So maybe we can start looking for buys on the 15-minute chart, though. We have this double bottom here, but the relevant high, as you learned so far, it's this one and not this one anymore, because that was the impulse move, and the market didn't manage to do anything with this swing. It retested, it didn't broke below, but this is the high and this is the low. So if the price is going to make a higher high, then and only then we know that buyers are in control, and we're going to wait for some sort of red candles to start buying this market. Again, the strength on the US dollar. Same with the JPY. On the lower time frames, it's really, really mixed. It's not something I would like to get involved with that. However, the US dollar is just sidewaying this market, and it means that the Japanese yen is strong. So again, the clearest for today, in my opinion, is the sterling short and maybe the USD cat long. So keep an eye on those. Pound yen, nothing here. Aussie yen sideways here, so nothing. Euro touches finally this resistance here, but the price action, it's not a strong price action to that it can show some rejection, so we can get involved to the downside. But for aggressive traders, if you want to place a sell stop here with your stop loss above there, and hopefully you can get filled and in a possible move to the downside, I won't do that. I really like the Euro Oz from this point here, and we said we were buying it along the way, and I really hope some people, they understand that we had this trend, higher highs, higher lows, and then this pushed to the pullback, and then this bullish engulfing here, 50% entry, the stop there, it's about 3421 until it reaches that target. And that's the thing, guys. Let's say if someone risks 2% on a trade and you get a trade with 3, 4 to 1, then it's 8%, 6-8%. So you just need few trades a month. You don't need to over trading. Okay, just few trades a month, and you are really good. If you install that belief in your head, then it's, trust me, your trading, it's gonna feel much more simple. Right now, I'm not going to short because I didn't see any price action to allow me to short. The only thing I see is still some strength from the buyers. But to resume my buying activity, I would like to see a break and close above this high point here. So for now, I'm on the sidelines. This one here, the Aussie cat, still, it didn't reaches this destination. I would like to see it reaches destination. I still see more bearishness in the market, so we wait and see what happens. Pound in general, it's relatively weak, so the euro pound can give us some good push to the upside. However, euro it's also weak, so maybe it's not an ideal way. Regardless of the analysis we do, it doesn't mean necessarily that we have to start initiating trades. Antonio, buenos dias. Hello, hello. No, that's crude oil, the gold. Where is gold? Why I didn't see the gold chart here? I think I deleted accidentally. That's okay. And crude oil, we lost the zones. Okay, here is the crude oil. We approach this. We are around. That's not clear. I like this area, but also this area here. So it's a bit of mix with the crude oil. So let's keep all this area here because we cannot decide on exact spot. So from here we can expect some selling pressure to the downside. For aggressive traders, a double top here it's enough. But for me, I want to see price action on the daily to show dominance from the sellers. Euro New Zealand, the same. We approach this level of resistance here. Now the market is just trying to bounce off this trend line, or I think if you plot the 9 moving average, it's gonna just capture these swings very nice. I haven't tried it yet, but just from experience, I can see that this move, it's going along with the 9 exponential moving average. And let's add the gold. Gold on the daily chart, we have this obstacle here. We just try to break above, but yesterday, if you can see the candle, the buyers, they didn't manage to create a higher high, and we have this same reversal type like in one of the indices. I think it was the DAX. So that's telling me more. If I see some 15-minute charts, lower highs and lower lows, I'm more keen to sell it here. It's a good bearish engulfing candle. If I was about to sell from here, 40 pips stop loss, target 60.80. So if we can see some lower highs and lower lows, that will be awesome. We can short the gold as well. Yeah, so few handful pairs for today for intraday trading, for those who are trading intraday trading. And pretty much that's it for this morning briefing. We didn't answer one question. Can you explain the contract size difference between indices and FX? If you right click on the, let me see if I can find them here. No. You have to go to the market watch and find the pair. And on the indices, let's find an indices, let's say the S&P 500. If you do right click and you go specifications, you will see the contract size here, and it says 1. Wherever, if you go to a currency pair, you will see the contract size, it's 100,000. So the leverage, to open a position in a currency pair, you need to have funds equivalent to 100,000 of the currency you're going to trade, let's say dollar for this example. So because most of our accounts are not that funded. We use the leverage to be able to trade with that requirement. Whether it's on indices, one contract size equals to the price we see on the right side on the chart. So we have to use the leverage to meet these margin requirements, and that's pretty much their difference. Okay, in both cases, because they are expensive to be traded, we use the leverage to meet these requirements. But really, the contract size in this occasion doesn't make that much of difference for a retail trader who are using a broker and they have not that much money in the accounts, because again, you have to borrow money as the leverage to open the trades. In your trade, the only thing it difference is how do you calculate them with the pips and this stuff. Okay. All right, guys, that's all from me today. I would like to thank you again for participating in this live trading webinar. I hope you gain a lot of value, some inside information about how to trade candlestick patterns and trend reading. I wish you to have a good day ahead, a happy trading if you're going to trade intraday. Remember, stick to your plan, stick to the rules we say, and I'm looking forward to see you again at the same time here. Okay, thank you so much and bye for now.